Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't, give me a follow on Rumble. Let's get into today's stuff. First, I always start off, or I don't really have this plan, just happen. So if I don't do it, some other video in the future. But generally speaking, we'll say that, start off the U.S. economic data. And this was interesting. The market considered this mixed. I consider this as bad. But non-farm payrolls, 143,000 for the month of January, well below the forecast of 205,000 or consensus. Why do they have consensus and forecast? It's generally the same thing. But what they liked was a couple of things. Average hourly earnings went up 5% instead of 3. Month over month, year over year, 4.1% instead of 3.8. They said the participation was up. It was up 0.1% instead of 62.5 here at 62.6. And it was even positive with manufacturing payroll. So this probably has consumer sentiment. If you look at it, used car prices were up 4% from those have been really tanking. I haven't talked about them much, but this gets into my other. Michigan consumer sentiment was horrible, 67.8% instead of 71. I have something like that. And even inventories were a write down of 5%. So inventory write down. So I would say overall this is bad data, but they call it mixed. Let's see how the market reacted today. It was up and down, but the Dow Jones finished down 444, the S&P 57. And this is what I said. I think in terms of the economy, I think with Trump being in office, the media and everything else is gonna be much more optimistic. Yeah, you can see it here. Wages rise more than forecasts. Resilient. That's putting their spin, but they're going to be much more. They say personally, this is why the press says the market went down. They said announce a plan on reciprocal tariffs on imports with China, which I mean, I don't think anything in the market keeps rising. I think the Fed will step in with QE. And this is what I always said. Yesterday I took a victory on the Trump tariff thing, and then today had to happen. So who knows who cares what I think, I guess. But yeah, anyway, today reciprocal tariffs on imports during a meeting with Japan's prime minister. And he also said tariffs on Japan were an option, which would be sort of ironic, but I think if the US economic data was actually strong, the market wouldn't be tanking like this. So anyway, and you look at it, they talk about the inflation or the sentiment. A lot of people see, look at here, gold sentiment, inflation rises 2 point, inflation rise to the highest since 2023 as consumer sentiment hits low. Uh, The rising number of Americans are anxious about the state of the economy, and it's all about inflation. That makes sense because Republicans, generally speaking, in terms of sentiment, they voted for Trump because they're unhappy with the economy, and they already are unhappy with the economy. They're not really bullish, but now with Doge and everything, Democrats are unhappy, and so sentiment would tank. So it's only natural that sentiment and pessimism would actually increase overall because no one's, that's one thing the voters of both parties can agree on is the economy sucks. And the future is not going to be good either. Anyway, and it's going to be a long term because they're not making the right moves. They're not talking about default. They're not talking about drastically cutting spending. Doge is a roach. They're cutting some things, but they're reallocating spending at other places, so it's not effective. Uh, so anyway, concerned about stagflationary effects. So yeah, we're seeing uh negative. And if you look at it here, another sentiment indicator. I'm no fan of CNN, but I wouldn't expect a bounce because right now the sentiment is at fear. I would say I always look at extreme fear and then extreme greed is when there's 1 year ago it was at greed. And look, it's been at fear for a while. So I expect it to get worse because if you look at the Michigan consumer, that was 67. I expect it to get worse. Fear is coming up. So you look at it, but this is what I think. I think it's more the economic data. The press reports the trade war, but this is why intermarket analysis is important. If trade wars are scaring people, gold would not be going down. And I'm going to do a 1 day thing with gold right here. So if you look at it right here, what time is it? It's around 8:30. So right here, jobs numbers, gold spikes down, spikes up. And then around 9 o'clock, when they fully digest the data, they realize it's bad and it starts going up. And then consumers, and then it just started rising. Now, I think some of this is profit taking because if you look at it, they're right around 2,855. There's some buying. It's around noon. But if this was a true trade war, gold would have gone up drastically. That's my opinion. So I think if this is so that's the other thing. And this is one, but I think as long term, just switching topics here, as long term interest rates go up, this is another bear market that I think is going to be. We're already in a bear market, but I think will continue. Treasury retained losses as jobs reports leaves Fed path intact. So if you look at it, as I said, they're going to have to either allow bad economic data. And I think they'll get that. And, you're starting to see, uh, if you look at it, I said this before, we're either going to get really high inflation or we're starting to get bad economic data. If you look at it, 143,000. If you look at it before, look at it, upperly revised 300 for December. That was, yeah, if you look at it, way worse. And November was revised up to 261,000. So November was 261,000. That's right here. December was 307,000. This month is 143, and it was look at the forecast. 205. The consensus was 170K. And you have to remember, most of the jobs were in government and they're going to lay people off. So I think for the next couple of months, we're probably going to see weak jobs numbers. Now they'll have earnings, but I think that will continue down because a lot of government jobs are actually good paying. So I think we're going to see that. So, and the one thing about the market is I think it's expensive. I think there could be one more move up. If there isn't, maybe the bull market's over as we speak. I think those are the only two scenarios I think can happen. But right now, with the debt, with interest rates rising, I think they are going to eventually, later this year, going to try the QE bomb again, or they're going to do QE. But they're not there yet. They're not even talking about it. In fact, if you saw it, the Treasury market was down because they think the Fed's interest rates is on path. And remember what I said before, another reason I think the tariff sort of thing is nonsense, I still do. Remember, one day doesn't make a trend, is because QE. That's the thing. If it falls too much, they're going to go for QE. That's what they're going to do. So they're going to go in and they're going to go for QE. And that's what they're going to do. That's their ace in the hole. So anyway, that's all I have today. Hit that like button, subscribe, and remember, nothing said on this video should be construed as financial investment advice, just my opinions and thoughts on the market.